It's Wednesday, April 21st, 2010. Welcome to freetradingvideos.com. D7 here. Check this out. Markets mixed. Dow up, at NASDAQ and Russell's both up, with the S&P down. Russell's doing the best, up 0.6%. VIX up almost 4%. We're above 16 on the volatility index. Here we are on the S&P. We're heading up, 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 up. We're slowing or rolling over on our momentum. We still continue with higher swing highs, higher swing lows, and here we had a hammer that developed at the beginning of the week, and then yesterday we popped up. However, today we get what's called an outside trading rate candlestick. All that means is we have higher high and a lower low, and we break basically even for the day. Quite volatile, and then breaking even. So a whole lot of nothing here, and I wish that we would have continued northbound. But what I don't like is this. Why did our candlestick not go higher? Why did we not continue to rise higher, 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 and higher and test these highs? Why did we hang up right here, especially after Apple came out? And by the way, I owe everybody a huge apology. Yesterday, I broke the cardinal rule. I actually did technical analysis on RIM, Google, and Apple, and I said Apple was technically set up to not be faring out too well. And sure enough, that was just moments before they came out with earnings, and they beat earnings by 90% on the quarter, and with that came a huge pop, nearly 6% on the day, and we get this nice doji, and we're at an all-time high on Apple. So again, why do I apologize? Because I teach this to my students to always look at earnings before you make a trade, and I'm giving a technical analysis on this right in the face of an earnings announcement. So shame on me, and I slapped my own hand for that. But anyway, if you take this out and you take earnings and news out of it, this is set up to be more bearish. We cannot fight news in what the in the movements we get with that news. Those act as catalysts for movement to the upside and downside in creating both supply and demand. And here the demand won the battle. So here we are. We've moved straight up. We have a nice gap. Most gaps fill, so we'll see if we get a pullback. We get a little pullback and a test here at this area. We might have a nice pop, and that could give you a bull pullback opportunity if that were to happen. And I would certainly want the markets to also be bullish in confluence with what we're looking at here on the technicals before I would make any such entry. So back to the markets here. Let's look at the NASDAQ. The NASDAQ's coming up. Now what's great here on the NASDAQ is this little formation right here actually can get quite bullish. You could get one huge, massive candlestick. So tomorrow, I think if there was going to be a chance to get some legs and have a nice pop, I think Thursday will be that day. However, if we don't do that on Thursday, I think we're just going to chop around here for a while, maybe make a high base or a bullish, what's called a bullish pennant, and that could get bullish and head up. I'm watching that lower trend line like a hawk. If that gets violated, that will be a sign for me to be looking to go short the market. Right now, I am net to the bull side. So let's see if tomorrow we get that pop that I'm thinking we may. But if we don't, I'm going to have to just wait for for a significant pop to happen before we get to the end of this apex. And this pinching pattern that takes place can build up a lot of power. So there you are. I'm sorry I didn't go as fast as I normally do on these programs and on these videos. Maybe I'll do so next time. So take care and safe trading to you. And we enjoy your comments there at the bottom of the video.